Yeah, I think we can get started here. I see Jordan, welcome.
Hey guys, how are
The,
you?
the man of the hour here. So, hi Leah, hi Lewis, hi Ben, Stephanie, thanks for joining us.
Accessibility shortcuts.
Chuck, Patrick. This is cool. I'm really glad to see so many familiar faces. Kind of warms my heart. Everybody made time on a Friday for me here. So, um, I did write a little bit, so I want to have a nice intro here for Jordan, so you guys know how we got here and why we're here. Um, a couple months back, I gave a webinar presentation on blockchain tokenization and the future of finance, and in private market investments, and we had over 300 people register. So while the primary focus was commercial real estate, um, I briefly touched on how tokenization can unlock liquidity in many real world assets. So RWAs, it could be fine art, it could be precious metals, bourbon, right? Bourbon and tequila aging in barrels. And so after that webinar, somebody I never met, Eric Kaka, who's on the phone here from Innovative Group in Miami, reached out and he said, Matt, you have to meet my buddy Jordan. He's in the agave farming business. And so, as it turns out, Jordan is originally from Chicago, went to the same high school as my dad, New Trier, have some friends in common, and it just really feels like a small world after that conversation. For those who don't know, I recently became a partner in a tequila brand, El Nacimiento, and over the past year, I gained deep understanding of the tequila industry. So when Jordan presented for me his opportunity, it immediately resonated. And uh, so now the reason we've invited everybody here today is because ABC FinTech, my company, will likely form a syndication and raise, basically open this opportunity to smaller investors to participate in Jordan's $26 million raise, which you'll hear about in a minute. And before raising any capital, our philosophy is to gather broad, informed feedback as part of our due diligence process. And that's why we have such a diverse group on the call today. We've got broker dealers, wealth managers, private equity guys, attorneys, other spirits, brand owners, and social impact investors. I'm genuinely excited to work with Jordan. I really am. This is an amazing opportunity. And us together collectively, this is a curated group of people to thoughtfully pressure test his thesis, right? And we welcome thoughtful and challenging questions. Just please wait until the very end. At the end of his presentation, feel free to drop it in the Zoom chat. You can text me if you want, and I'll ask your question, or just feel free to ask it yourself. I'm looking forward to kind of an engaged discussion afterwards. And with that, I'm going to turn it over to Jordan.
Cool. Thanks, Matt. Thanks for the intro. So let me just give a high level of what we've done so far, the money we've raised, the success of the business, and then we'll go into the specific opportunity. So Miguel, who's also on this call, is my right-hand man. Both of us live in Mexico. I live half time in Mexico City. Miguel lives full-time in Guadalajara, where our fields are. We've raised about 34 to $35 million to date over the last 6.5 years. We are the only vertically integrated agave services business in Mexico. We broker agave, we grow agave, we produce tequila, we transport agave, we transport liquid tequila, and we also store and age tequila as well. And we're the only group that does that. 6 years ago, I went down to Mexico. I already spoke fluent Spanish. And I basically met with all of the multinational tequila companies and it said, listen, you're doing business with a lot of groups where you don't know the KYC on them. I'm an American, I'm well funded, I speak fluent Spanish, I come with American style business practices. Let's get into business together. And now we have the largest contract ever given from Diageo. We're servicing right now. We work with Campari, we work with Brown Forman, we work with Jose Cuervo, we work with Patron. We're a known entity and one of the larger entities in the industry right now. To segment off kind of a little bit of track record on the opportunity we're discussing here, we're talking about the long-term farming or long-term planting of agave. And that's kind of the biggest opportunity right now. There's often these massive boom and bust cycles in the industry, and we're kind of immune to them because we have our hands in each part of the cycle. But here right now, there is a massive opportunity to plant agave at scale. I'm personally investing $5 million of my own capital into the opportunity. We already have plants planted from we have plants in every single age right now planted. And if you do or do not know, agave takes 5 years to grow. And what we're looking to do is at scale plant agave to take advantage of this very unique opportunity that will exist only over the next 3 years. So 26, 27, and 28 is the opportunity to take advantage of it. And I'm going to have kind of a rolling raise over these years to plant basically, as the CEO of Diageo told me, plant as much fucking agave as you can. And that's what I'm trying to do. A win for me would be planting, 500 hectares or more. We have the capability to plant all the way up to 2,000. So the deck that I sent to Matt is for 450 hectares. Why 450 hectares? Just seemed like a reasonable amount that I could raise. But the home run would be to raise above and beyond that. And that's what we're in the process of doing. Thus far, we've raised $10.5 million out of this $26 million tranche. And if we're able to raise the 26 million, then we're going to go ahead and restart it again and do another 26 million. So that's where we're at. So we basically have, I don't know, 40% of it raised already. And I discussed this with Matt, and Matt thought this would be a good opportunity to try and raise some more together. So Miguel, if you want to bring the presentation up, I can kind of walk you guys through specifically what the opportunity is and why it's unique. So I think the most important thing, if you scroll down, Miguel, to slide 8, please. And we'll be happy to send you this deck. But I think just to make it a little bit more abridged, the most important aspect of this opportunity is, if you look at it from a risk profile perspective, there's very little demand risk. Tequila has been growing at 6 to 8% a year, regardless of kind of the decline in many spirits. Tequila is now the most consumed spirit in America and growing at 6 to 8% a year. So that's on the demand side. And the executional risk, we've been doing this we've been planting for the last 7 years. The whole former executive team of Jose Cuervo, the CEO, the general counsel, the head of planting, the head of agriculture, they all now work for us. They're kind of like I don't know, dream team of agaveros and those in the tequila agave industry. There's not a person who's in the industry that doesn't know them. They work for us and advise us. We have a team of about 45 employees and managers that manage all of our fields. And this is something that we eat, sleep, and breathe. And planting agave is not complex for us to do. So from the demand side, we feel like there's very little demand risk that agave is going to be needed in the years that we're discussing. From an executional risk perspective, this is something that we do in our sleep and have a proven track record of doing and being very profitable at doing. And that's kind of like the opportunity in a nutshell. So what you see here is the boom bust cycles of agave. And as you can see, it's very, very cyclical. It's interesting to note that 85% of the market is made up of poor, uneducated rural farmers that, for one reason or another, do not have the foresight to understand that just because prices are high one day, that doesn't necessarily mean 5 years from now, the price of agave will still be high, as you can see in these charts. Where you see right now in 2025, 2026, the price is essentially at the cost to plant. So it is at close to an all-time low. Why is that? Because during COVID, when you see in 21 and 22, everyone planted agave. They're dentists, doctors, lawyers, anyone who you could imagine were planting agave. Well, what happens? 5 years later, there's a glut of agave in the market and prices tank. This is very, very basic supply and demand. Miguel, if you go down, that will be helpful. And this is what you see here. So right now, you can't sell an agave if you try. So the opportunity here is there's blood in the streets, buy real estate. There's blood in the farms, plant agave. And what you can see here in 25, 26, and 27, and 28, you can see the overages of agave. This is data from the non-governmental organization that houses tequila. It's called the CRT. This isn't necessarily public information, but because we're So integrated within this non-governmental organization, we have this data, which can be vetted and verified. So the yellow line, dotted line, indicates demand. And then as you can see, 24, 25, 26, 27, 28, there's a significant overage of supply versus demand. What's happening? People are now walking away from their fields. I'm buying a ton of distressed agave. People are giving their agave away to us just to manage it. You can't really, unless you're us or a known group, it's difficult to sell agave right now. And so people are walking away from it. Agave is dying. Imagine you're a rural farmer, you put your life savings into agave, and now you can't sell it. You're in trouble, and you're in a lot of trouble. So they call people like us to try and get them out of trouble. And obviously, it's very profitable for us, and that's what we're doing. But interestingly enough, because of this overage, because of this oversupply, because of the tanking in prices, no one is planting agave right now. There is, if you go to the slide, Miguel, what slide would make sense to show about? Yes, exactly. I think you've done this once or twice, Miguel, because you know where I'm going. There you go. So if you can see this year, if you did this 5 years ago and I took any of you guys to Jalisco where you plant agave, you would see agave on the side of the road. You would see agave in every single field. You would see agave all over the place. If you walked with me in Jalisco right now and I said, let's go look for some 1 year newly planted agave, you're not going to find any. Especially you're not going to find any from third-party growers. Very little. And the only people that are planting right now are myself and 4, 5, 6 other very wealthy generational families that have been doing this for 100 years, who also understand kind of that no one is planting right now and what will happen in 5 years from now, which is there's going to be a tremendous shortage of agave in 5 years from now. So that's the opportunity that we're trying to take advantage of. As you can see here, where it says growers quit when prices fall. So there's going to be a demand if tequila continues to grow at 6 to 8%. In 5 years from now, of roughly 100 to 120 million plants will be necessary just to meet demand. We saw this happen during COVID. Demand couldn't be met. Prices of agave skyrocketed. Right now, for the sake of just discussion, 1 kilo of agave is 6 pesos per kilo. During COVID, it was 32 pesos per kilo. We think the same thing is going to happen here because the supply-demand gap is even going to be greater than it was during COVID. So one has to answer, if only 20 million plants were planted last year and presumably this next year, how does it meet the supply necessary for 100 million or 120 million plants? And the answer is it doesn't. And we saw this during COVID. So what happens? What happens is, in this scenario, the tequila companies would buy the first 20 million 5-year aged plants. Then they would go look for 4-year aged plants. And then they would buy all the 4-year aged plants. And then some companies will buy 3.5-year aged plants. And then once they get through that, they'll start buying agave that they shouldn't from other territories that isn't within the denomination of origin. They'll buy agave used mostly to make mezcal called espadín. So they start to mix piñas or plants of agave together, which is technically illegal and they shouldn't. And then the last ditch effort is they start buying sugarcane alcohol and they mix agave, blue agave, 100% blue agave with sugarcane alcohol. And there was not a company during COVID that was of any size and scale that did not mix sugarcane alcohol with 100% blue agave during the time of COVID because of these shortages. They just wouldn't even be able to even come close to meeting demand, and they didn't anyways. And so it's funny, many people are saying, oh, I like the tequila you produced more during COVID than I like the tequila you produce now. Yeah, well, because there was a ton of sugar in that tequila and it wasn't 100% blue agave. And yes, it tastes better with sugar. So that's what happens. And the whole thesis here is, as I've discussed, is prices are very low. Nobody is planting. It's going to be impossible for demand to be met in 5, 6, and 7 years from now. And the goal is to be one of the big boys on the block, being able to kind of set, which we were before able to kind of set and control prices. And you can almost, presumably put a for sale agave sign by the side of the road, and you would have every single tequila company in 2031, 32, and 33 knocking down your door to buy your inventory. Now, from a risk mitigation standpoint, which is customary in the industry, in 3 years from now, We'll be able to sign offtake agreements with the Diageos, with the Camparis, with the Brown Formans of the world if we want to. But obviously, that offtake agreement price, based on our estimates, will be significantly less than the price that we would be able to sell in the open market during the time of harvest. But from a risk mitigation standpoint, we could kind of insure 100% of the investment back if we wanted to, and then take more of a risk on, I don't know, 30, 40, 50% of it, just or we could lead it all to the open market, just dependent on kind of investor appetite and the way that the market is looking. But we feel very strongly about it because we've been through these cycles. And as I told Matt, we have a very large baseball here. I'm just trying to hit it as far as I can because I'm as certain as I've ever been in a business setting that there's a very real opportunity. Not to mention the CEO of Diageo is willing to get on the phone call with any major investor that I brought to the table to not only to basically verify and validate what I'm saying is true, beyond what I've kind of produced here. So there's a lot of backing here and a lot of layers of industry experts that I can bring to the table that are completely independent that can kind of validate this opportunity. Here's a little bit more about risk mitigation. Again, executional risk we find to be extraordinarily low. We have a track record that can be reviewed and vetted. Pricing. So all this hinges on our estimations of a 25 peso per kilo price at the time of harvest. If I'm off by, I mean, as you can see right here, if I'm off, if the price is only 10 pesos per kilo, it's still a 1.82 MOIC. I don't see how it's, I personally guarantee that it's not going to be at 10 pesos per kilo, but if it's at 15 or 20 or 25 or up to 25, it's a win. Agriculture insurance to prevent against crop loss, principally due to perhaps an act of God, which is unlikely, but again, possible. We have quotes around the premiums are rather expensive, but we have quotes around that we can share with investors if they're interested to wrap a crop loss insurance policy around this for further security. I would say that in 8 years of doing this, we do not know one group that has ever done that, due to the fact that agave is a cactus. It grows with the sun and the water. With the rain, there's no irrigation systems in place. We've had 4% crop loss over the last 7 years. But again, if it's something that investors feel is necessary, it's something that we can discuss. We already have options on 500 hectares of land. For us to get more land is not difficult if necessary, due to the fact that no one is planting agave right now. And I mean, that covers a lot of risk mitigation. I think we can have more conversations about that. If you go down, Miguel, to what we've done already, I think it's just or the Cristobal slide further. Yeah, so this is kind of like what we've done already. We have between 28 and 29, we have a large amount of plants that are going to be harvested. Those are the ones that are under contract with Diageo. So that's going to be a nice little windfall for Miguel and I and our investors in 28 and 29. And we're looking to kind of do the exact same thing in 26, 27, and 28. 4 plants to be harvested in 2031, 32, and 33. If you go down, Miguel, to 12. So here's a snapshot with a waterfall that we built that we think is very investor friendly. These, to be clear, the money that I'm raising does not need to be raised. It needs to be committed, but I don't need the actual capital up front. It just needs to be committed year over year. And those, the downsides of the opportunity are, one, there's 5 years of negative cash flow, and depending on your point of view, that it has to be done in Mexico. Outside of that, I don't really know. There hasn't been a ton of people push back on criticism of the opportunity, but those are the 2 downsides. Agave takes 5 years to grow. Why? Because that's the point in which the sugar content is high enough in order to harvest. I'm working with an Israeli firm right now that we're trying to knock that 5 years down to 3. So we're in pilots doing that. It'll take several years to see if that works. But if we do, that's a bigger opportunity than all of it. But these would be the inputs necessary in order to plant 450 hectares. In the models that we're happy to share, you can play around with the number of hectares planted. You can also play around with the market price versus our assumptions and stress test this to see at what point does it become less interesting. But you would find that the prices, we have to be very, very far off for this not to be a significant return for investors. It's just, do you have the appetite to hold 5 years? And those that have invested with us currently, that has not been an issue. They've principally been large family offices. They actually look at this. Those that I think are sophisticated investors that have invested with us look at this as actually a low risk opportunity and not kind of a high risk opportunity that I think less sophisticated investors come back to me and discuss with me. But I typically think they don't really understand the nature of the business. So this is what it would be looking at from a check size perspective annually. And then that one can review the waterfall to see how you feel about how we kind of divvied up the profits. So I don't know if that gives. I hope that gives a decent explanation of the opportunity. Again, this is all in the deck. I'm happy to answer any questions. Miguel, maybe if you go to slide 4, we could wrap it up with that. This is kind of what it looks like in tranches. So this is like a snapshot of the profitability. Again, we've done this successfully already, not at these numbers because the price we have under contract with Diageo is significantly less than the price of the open market. We don't know any major farming entity in Jalisco who's planting under contract right now because it would cut off the opportunity for massive upside gain. But again, in 3 years from now, we could change our mind if we want and lock it under contract. At 7 pesos, it's a break even for investors at 7 pesos. Should everything go horribly wrong, the market price now is at 6 pesos. The historic high during COVID was at 32 pesos. We conservatively put it at 25 pesos. And I think anything over 15 or 16 pesos is a big win. And that's where we're at.
Jordan, thanks. It's kind of funny. I had a few questions come in, but you answered all of them already. So right now, this is kind of when we're going to open it up to you guys. So if looks like we got a hand raised here. So go ahead, Jason.
Thank you. Yeah, like I said, incredible presentation. As an avid tequila drinker, super excited. This is fantastic. The one question I had, and again, as an overall market, alcohol is always going to be fantastic, but there has been significantly lower drinking from the upcoming generations. And again, correct me if I'm wrong, but I believe like 18 to 35-year-olds, like 75% drank up to like 2016. Now it's down to 50 and steadily declining. Obviously, everything's phasey, music, culture, everything. So we're just wondering your thoughts on that. And if you even think that regardless if it dips, if the amount of even if it dips, the amount of agave is going to be so low that no matter what, it's going to be a pretty amazing opportunity.
So one of the things I've pat myself on the back for is that I try and write decks where I'm going to answer any questions in the deck that someone may already have. So look at where it says market trends right there in the risk mitigation.
Yep.
We put something there in order to combat that question.
Amazing.
Right. So yes, that's true about spirits. No, it's not true about tequila. Number one.
Interesting.
Number two, the delta, Miguel, it's too, well, I can't see it because there. Okay, yeah. So the delta is so big between the amount of plants planted and the amount of plants necessary, even if it stayed exactly the same, that, I mean, you can
even if it declines by 50%, there will still be a 40 million plant shortage, like declining by 50%. Wow. That's how big the gap is.
I want to chime in here too. This isn't included in here, but I love Jordan's thoughts, is the international market. I think the trend you're talking about, Jason, is US, but I see a huge demand increasing for
So what happened during COVID is there was not enough, as I discussed earlier, there was not enough tequila to meet US consumption. And so what happened is they basically pulled back from like any European and Asian push of tequila. Now there's such an oversupply. There's like a tequila lake, they call it. So there's such an oversupply. That's why no one can sell their agave. And so now they're spending a lot of money pushing it into Europe and Asian markets as well. So again, I think that what I can say as of right now is tequila is the most consumed spirit in America. It's been growing to, this says 9%, some say 6, some say 11. We just kind of took the average, 9% year over year. And then again, because of this big delta, it's like, what's going to happen is what we saw happen before. Like I said, first they take all the 5-year agave, which there isn't enough of. Then they take the 4-year agave, which there isn't enough of. And then they find basically unethical ways to fill bottles of tequila. And when I say every company did it, and now every single company did it during COVID. I know because I sometimes was supplying, they say, well, this is going into one of our mixing drinks. Okay, fine. I'll supply whatever you say. And then I would just supply it to them. And then we know that they would be putting it, because we know people there. We know that they'd be putting it into their Don Julio. We know that they put it into their Casamigos. Every single company did, because there wasn't enough agave. And
that's where the class action lawsuits are from as well.
Right. And this will happen again in 2031 through 2033. But the difference between during COVID in 21 to 2033 is that during COVID, they didn't have enough agave because a regular amount of agave was planted, but the demand just spiked during COVID. Now the demand came down a little bit, but the difference here is there's just not going to be enough plants, right? And so again, those, I would say like there's no really competitors per se, because we all kind of work together to hold pricing. But I mean, like the biggest guys are planting, one or two groups, I would say, are planting 2,500 hectares. And then I would say a few groups are planting 1,000, and hopefully we're planting somewhere between 500 and 1,500. So like we're in the big boy range. We're basically in the big boy range of everything we do. I mean, we've had years of $60 to $70 million worth of revenue. We've had years of $20 million worth of revenue. It just depends year over year based on what these cycles. And we're trying to be this is everything I've done in agave over the 8 years. All the money, Miguel and I and our employees have made will be a failure unless we're able to raise a significant amount of money here to take advantage of this, this opportunity over the next 3 years. Because after these next 3 years, if you said, hey, I want to invest in planting agave, I'd say, great, let's go lock it up under contract with Diageo. The IRRs will be compressed. It's still a nice business, but it's not the opportunity that exists right now. And once the prices go back up, you know what you're going to see? Everyone start to plant agave again. It's like no one learns. It's like, that's what you're going to see. You're going to see it. Then I'm going to say in 2033, come walk Jalisco with me, and you're going to see agave all over the place. And guess what? Then there's going to be an oversupply again, and then the prices will tank again. And so that's what's going to happen. I mean, and even the tequila companies, again, like we can bring you on the phone with the heads of these tequila companies because we have a great relationship with them. And they'll tell you the same thing. They're going to say, and then my question to them is, you guys are, Diageo is a $200 billion business. Why don't you break off $1 billion and plant agave with us at like, I don't know, 14 or 15 pesos, give me a contract for the next 20 years and control some of your cost of goods sold. And they laugh. They say, yeah, we wish we could do that, but that affects our stock price and we live quarter to quarter. And, we've chosen to integrate ourselves on the distillation side, not on the planting side. And they're forever going to rely on third parties to plant. I mean, Diageo they'll tell you they planted 10% of their own agave this year. The reality is they probably used 1.5% of their own agave this year and years before. And so it's like, a company like Sauza is pretty well vertically integrated. But besides that, every single company relies on third party. And then you have a lot of these smaller brands that are still big, like Kendall Jenner's tequila or the Rock's tequila. There's still, several $100 million tequila companies that don't have their own distilleries and don't have their own plants. And
Jordan, if I can just chime in here for a sec, I have to plug tokenization into this conversation because you're looking at, which is declining cash flow for 5 years until the exit. I mean, if we were able to tokenize this offering, and if you planted the agave, we see the price of agave start to increase in years 1 and 2. Tokenization could give people liquidity and a way to exit.
Well, that's what
that was my thesis from day one, and why, Matt, I connected with you. It's like that's where my mind went initially with this. Yeah.
And so whether or not we tokenize it, I don't.
And my position has always been great. Someone go do it.
Right? Yeah.
My position is that I'm positioning myself as the dumb farmer. So I don't know. You guys go do that and tell me when the money's there, and I'll be happy to take it. You know what I mean?
We want to help raise the capital the traditional way. The token.
But I still think it's a great idea too. But yeah, it is 5 years of negative cash flow, right? And that's why most of the people that have invested with us are, ultra high net worth family offices that were looking for something with limited, actually, if you get over perceived risk, but like actual risk and low downside. So if you play with the model, you can see that it's, prices have to get extraordinarily low. And I don't know how they would get that low in order for this not to be a profitable venture. So,
Abby, you got a question?
I was just going to say, in terms of the tokenization, and Matt knows this, I helped co-run the webinar with him about tokenization of commercial real estate, but you can also secondary trade. So if you're wanting your investors to come in, but they're still like on edge about it, they could secondary trade their investment. So if they want to get rid of it, then they can. And someone that is confident in the agave industry, they'll buy it up because they know that the demand's going to increase later on.
Yeah, that's a great point.
We have channel partners or, anybody that is assisting with the tokenization plan so far, or I guess any early leads there. This is my world. I work with a few different blockchain foundations, co-founders over at Coinbase. So happy to potentially make any introductions if that's something that is still needed.
Connor, what I would be interested in, and I kind of alluded to it before, is that isn't on its face as someone who's a complete novice in the space. I think it's a great idea. Right. I think it's a great idea. I need someone who will take the bull by the horns and do that. I don't want to do that. I'm happy to partner with someone, but
that's where
Connor,
blockchain foundation will come in.
To your point, we would need to partner with some of those. And if you have any relationships there, then great. Let's explore that.
I have one with the leading sustainable blockchain in the world that does a lot of the supply chain and logistics tracking. Mm-hmm. So happy to make that introduction.
Yeah. There's also a Jordan, you could talk about that angle of the sustainability side of the planting too, which could be interesting.
And I just want to be there is no one planting agave sustainably at scale. We're the only people that are planting agave sustainably. Not all of it because we're not getting premiums for it yet, but some of it. If, one angle, again, I've met with the most sophisticated, quote unquote, the most sophisticated funds in the world describing this opportunity. Most of the time it's been a no because I couldn't get to the scale. I can't take $300 million of investment. But
of course.
The point in saying that is that I have a sustainability deck. At the end of the day, I found that no one actually will pay a premium for sustainability. But if people actually will, yes, we would be the only people planting sustainably at scale ever in Jalisco, and we have the methodologies in place, we have the track record in place. I put that together, frankly, just to raise funds. But yeah, we would be the only person doing that. And then I meet with Diageo, and they're like, "Well, can you do that for the exact same price that you're planting normally?" I'm like, "No," and so that's been the frustration. But yes, from a social impact standpoint, we pay our farmers 3.5 times more than the standard wage. We plant sustainably. We have a track record over the last 8 years of giving a percentage of our proceeds back. Not really for any PR, just for the fact that we want all of the best and most loyal agaveros to work for us. And the difference between $75 a week and $125 a week is not a big deal.
Exactly.
It carries a lot of weight on the brand side, though, right? So imagine when you're able to slap on their box, planted sustainably agave, that means a lot to them from a marketing and PR angle on the brand side.
It does, yes, but in the sense that, yes, but they're not paid more for it. So now it's
right. They have to pay. That's
what I think, Connor. What I think, Connor's interesting about this opportunity in this regard is that I see so many sustainability, businesses in sustainability that are sustainability first, business profit second. This is business profit first, sustainability second. So it's actually a great opportunity that it takes very little to, you're not going to convince farmers that have been doing this for 100 years generationally to change the way that they plant agave. But I'm the only gringo it's me and everyone else. And absolutely. So, the reason why we've done well with these major multinationals is because we're malleable to the degree that, again, American business practices, not don't tell me what to do. I've planted agave this way.
Of course. Well, I won't hog any more of this. We'll definitely chat on the side here, but congratulations on what you guys are building and excited to make some intros for you to hopefully add some gasoline to the fire.
Great.
I have a question. If I could take a turn, I couldn't figure out.
Yes.
Just just generally, I mean, you talked about taking over existing farms or existing crops that needed to be managed. Is there a component to this growth which involves buying additional acreage? Is there a real estate component to your
Uh,
projections?
so I would say that 95% of those that grow agave or plant agriculture in Jalisco, let's just keep to agave because I know certainly that
Hmm.
leases the land. All of the land that Cuervo buys on, they lease the land. All the land that Diageo buys on, they lease land. It's industry standard. Now, if an investor, I don't think this is land that is like going to highly appreciate,
Hmm.
but
Understood.
certainly could be done. This is very rural. It's like, do you want to buy
Uh,
farmland like
I
Dubuque?
got it. I didn't know if there
Yeah.
was that's the answer to the question. It's 95% lease. And if there's additional land required to meet the demand, you would go out and lease more acreage.
Correct. Yeah. Right now, because no one's planting
Okay.
agave, it's basically Driscoll. Like our farms are next to all the
Mhm.
Driscoll farms. So like you'll see a
Mhm.
lot of blackberries and raspberries and blueberries. So we
Mhm.
drive to Driscoll all the time.
Okay. The other question I had was just in terms of use of funds, is there like it doesn't seem to be the farming element is that capital intensive? It doesn't require infrastructure. Is that correct, or
Yeah, Miguel,
is it one of the sources
can
of
you
spend?
bring up the model, Miguel? Not the model, not the screenshot of the model, but the actual model, because I think it'd be interesting to show.
Mhm.
Miguel, you're really on top of your game today. You really got
Always are.
no, not this good. Okay, so as you see, so it was funny that Thomas, you asked me that. So I met with a fund yesterday who said, you know what, Jordan, we're very interested in this, but the thing we're most interested in is the fact that it isn't some AI pitch and it's as simple as you can be,
Yeah.
right? It's like, thank you for giving me something black and white, whether we do it or not. So at the risk of, and it's funny because everyone tries to come up with some complexity here. At the end of the day, generational semi-literate farmers are making 50 to 100 million dollars a year during these cycles. You see them guys that can't read driving Lamborghinis through bumpy fields, like it's almost comical. And you know why? Because they plant as much as they can afford to plant because they know the cycles. And that's kind of what we're doing here. So if you look at this, at the risk of this looking sophomoric, if you look at the operating expenses, those are the inputs. I mean, and I will personally guarantee any overage of budget in these inputs. That's how certain I am. This is how long we've been doing it. The prices have actually gone down based on no one planting. The land
Mhm.
cost has gone down. The labor cost has gone slightly down. The seeds cost has gone slightly down. The rest of it has stayed the same. And so those are the inputs. You
Yeah,
know,
I was going to say it doesn't seem like it's more labor than plant and equipment
it's
expense.
literally plant successfully, tend to the fields, and wait.
Hmm.
Now, if you look at if you see in yellow, it says price. Um, if you, Miguel, if you want to, if we're wrong by call it, I don't know, 20%, Miguel, take it down to 20 pesos.
Hmm.
Which I don't think it could be that low, but it's still a Miguel, does it change the cash flow?
33% IRR.
But
The
this,
cash flow doesn't change the capital, but the gross revenue and obviously the profit, but it goes down to 33% IRR. And if it goes down to like 15 pesos, there's like a 25% IRR on the
To the
venture.
investors. To the
Yeah,
investors.
To the investors. Yes.
just trying to understand. So there's not like sophisticated harvesting equipment. It's not storage.
Yes, it's called machetes and Mexican.
Right.
And Miguel drives the ship there. So, Miguel, I didn't introduce Miguel, but Miguel speaks fluent English. Miguel is the head man, is a partner in the business, runs the day-to-day operations. My job has been getting the contracts with the large multinationals and raising the capital. Miguel does 85% of the work. I do the 15% of the hard work. Miguel does 85% of the other work. So but as you can see, the IRR is still strong. I mean, Miguel, bring it down to 10 pesos. The price right now is bottom barrel price at 6 pesos. At 10 I have contracts with Diageo for 14, 15 pesos. At 10 pesos,
just for you to see like where to look, this line right here is just like the just for the investors itself, this is already at 10 pesos. This is the capital requirement, which is almost at 26 million. So this is where the 1.89, I think, MOIC come from. So obviously, like the only difference you can see is that since we're planting year over year, like the how the waterfall is composed during the 3 years changed a little bit. It's based on the ability to like meet all the tiers, but yeah, even at 10 pesos, this is the overall payback to investors. So that's a 13% IRR. And right now, as Jordan said, it's it's like 6-7 pesos on the market. And it's probably like a really bad time as of right now, which doubtfully will be the same in 5 to 6 years.
Put it back up to 25 million. So, and again, we were selling agave in our brokerage business during this last cycle for 31, 32 for an extended period of time. So again, like we believe, and the market believes, that in 28 or 29, it'll be somewhere between 12 and 15 pesos. And then by 31 through 33, there's just not going to be any agave in the fields. We did kind of an internal study. We threw in a few bucks with a lot of the other large farmers. We all threw in a few bucks, and unscientifically, basically hired 20 guys to just go walk the fields of Jalisco, which is a second biggest state in Mexico. All the main regions, all the outskirts regions, and the amount of 1-year-old agave was like negligible. And we feel like in 2026 it'll be exactly the same. People will
plus something to add up in that regard is that Jordan's right, but on top of that, like the 2, 3, and 4-year agave that you are able to find, for the most part, it's not good agave. Just because, as Jordan said, like a lot of growers, when prices start tanking, they just rather lose 2 years worth of planting agave. They just like go all the way to 3, 4 years and just like break even and do all the hard work. That's just unfortunately like some of the Mexican farmer culture. So we can share pictures with you as well.
A lot of the people started planting other crops now.
Mm-hmm. They just rip up the agave, or they just abandon it. So,
yeah.
I have a question.
Mm-hmm.
Hi, I'm Leah. My background's in the alcohol world, and now I'm kind of a farmer myself with a winery that I'm building. But so
have you ever seen Big Little Farm?
No.
Watch that movie, Big Little Farm.
He also has a co-packing facility.
I told the head of procurement of Diageo. Now she makes all of her employees watch it. Big Little Farm. It's about someone moving from LA to Northern California and building an organic farm. It's a very good documentary. Big Little Farm.
That's me. So
okay.
Thank you. I'll watch that.
Yeah.
So I'm just curious about who you would expect your customers to be in like year 4, 5, 6. Is it primarily going to be those people you already have the relationships with, or are you looking for like smaller tequila?
No, so kind of the way it works is there's something called coyotes there, which we are also. We're basically brokers. So again, when I said in the beginning, we're vertically integrated, we do everything. Most people just do one thing. So, and because we're vertically integrated, we're kind of immune to this, right? So like we're producing a lot of tequila now, but we're not selling any agave, so it's like some people who are just coyotes are sitting on the sideline completely and haven't made $1 for 15 months because you can't sell agave right now. So the answer is that there's 2 ways in which your agave is sold. One is through long-term contracts with a tequila company, which we have. Like I said, I think we have the largest contract Diageo has ever given. Stupid. They offered me twice as much. I said, no, I should have taken it. We wouldn't be on this call. I would be retired, but I didn't take it. Secondly, through coyotes. So the majority of the industry is purchased by coyotes. And what does that mean? That means most farmer, again, can't put yourself through like an American mindset. You have to put yourself temporarily in the mindset of a rural Mexican agave farmer. They would rather take a payment from a third-party intermediary than have to go through the processes and due diligence of working with a Diageo, right? So what they do is we go to them and we say, let's just say the market price of agave is 20 pesos. We'll say, we'll give you 18 pesos right now for your agave. They say, and they've paid 6 pesos. They've grown it for 6 pesos. So they're giving up 2 pesos. We buy the agave and we sell it to Diageo for 20 pesos, right? We do that all day long, every day. We've been very successful in doing that. And that's with the same thing that would happen here. So we can either, because we have the relationships, we can go to the multinationals and sell it directly to them, or we can sell it to other brokers if we wanted to, who pay us on the spot. Zero payment terms, by the way. So they don't take one agave until they pay us. So we either sell it to other brokers, which is fine, or we sell it directly to the end user. And we already have those relationships. We're doing it every single day. I mean, we're selling to, I don't know, what would you say, 8 or 9 different tequila companies?
Yeah.
But what will happen here is that, like, we've been selling to 8 or 9 different tequila companies for a long time. That's mostly relationship based because the prices are the same everywhere. It's basically like we have the capital behind us to supply large amounts and be able to hold, because many times, like, what our business is we'll buy from the farmer, we'll give him that money the same day, and then we have to wait 30-day payment terms from Diageo. Most people can't do that. We can do that at scale, and that's why we've gotten that business. But when we talk about the opportunity in 2031 through 2033, 34, there's going to be no agave, right? So you're going to have everyone and their mother, kind of clawing at us. Can we take your agave? And in year 3 and 4, they're going to be coming to us saying, wow, we see the prices rise. Like, can we lock something in now? And as in a group with the investors, we can say, hey, do we want to take some of the risk off and give an offtake agreement to Diageo for 16 pesos? Or do we see the market is trending in this direction? No, we want to keep it all at 25 pesos. That's just a decision that we can jointly make. But again, no one has been able to poke a hole into this delta here of how we've seen this before. The data strongly suggests the fact that there's going to be this like 5x shortage in supply versus demand based on what's happening right now. And that's kind of the whole thesis of this opportunity, is just kind of basic supply demand model with something that we've been doing at large scale for a long time.
And would they prepay if you did, say, broker a deal with them?
No.
No.
There's so many ways, Leah. There's so many very basic ways that a tequila company should hedge against this risk, and they just do not. They live quarter to quarter, and they just don't do it. But what they will do is they'll say, oh, you have 450 hectares? Can we buy all 450 hectares at 15 pesos, and we'll put it into contract right now? And we're probably going to say no, right? Because that's the whole point here. Right now, a Diageo should say, wow, agave's at 7 pesos per kilo. Jordan, you've been one of our biggest farmers for a long time. Let's go sign a contract right now for 14 pesos. You want it? I would still say no. I would still say no, because I would look at 5 years from now, the price is going to be in their 20s, in the mid to high 20s. So the issue of selling it will be not an issue based on the relationships we have, the contracts that we can get, and because of this basic, supply demand gap, like anything else,
Mm-hmm.
And the reason why they don't give any juicy contract when the prices are low, mostly as well, is because like companies like Diageo, they have to listen to global, right? So you have people in Scotland not knowing exactly what's happening in the field, and they just see the data from the CRT. They don't know that no one's planting agave. They don't know that agave is going bad, and they just decided, well, if we offer a contract, let's just give an 8 peso contract, which no one will take, right? And when the prices are high is when they should offer like actually cheap contracts, and it's the opposite. They offer high contracts. So you should basically try to get things under contract when the prices are high, and you should plant not under contract when the prices are low. It's basic economics, pretty much.
But that's not what's done.
It's not.
These inefficiencies is what gives us these opportunities. If they were perfectly efficient, we really wouldn't even have a business in any of these verticals, really.
Yeah.
So would you expect that your customers, though, are these multinationals like 50, like is the goal to sell to these multinationals?
Yeah. We'll probably
like
sell 100%
of this
We'll probably sell 100% of this to Diageo. But the real answer is we'll sell to who's the highest payer. We're not going to take payment terms we wouldn't take payment terms on anyone besides 4 companies like Diageo, Brown Forman, Pernod Ricard, maybe Jose Cuervo. Anyone else, they pay us on the day they pick it up. We don't release it until the money's in our account. So there's no payment terms on it, really. But yeah, like I said, in 3 years, we will be getting and maybe even sooner, we will be getting a lot of calls saying, hey, would you like to lock this up under X amount of pesos? Right? Because they're going to say, oh, we see oh, we knew this was going to happen, but we didn't really account for it. And you guys were smart to plant a lot of agave. Like, again, I could bring the CEO of Diageo to say all of this. And then they're going to say, well, how does 16 pesos sound? I don't know. Maybe we'll sell 200 at 16 pesos. I don't know. We'll just decide as a group. But if the market price is 14 pesos and we see it steadily climbing all the way from 7 to 14, we're probably not going to say yes to 16. But we might say yes to 20 and say, let's not even worry about that. That 5 pesos accounts for whatever, a 15% increase in profits. Let's just take all the risk off the books right now and sign it at 20. Okay, fine. Let's sign 80% of it at 20 and keep 20% on the open market. Okay, fine. Like that's, I'm not greedy here. There's so much money in this and we've already done so well here. Like, I don't know. To me that like, this is one of these rare opportunities. I probably shouldn't even say this, but it's one of these rare opportunities. Like, to me, it's almost like money in the bank because there's not a lot of like executional risk here, right? We're not investing in a tech fund that we have to market and we hope, or with all due respect, a blockchain fund that we hope like you can get liquidity in. Like this is like, we've been doing this. This is just there's 2 factors here. How many hectares do we plant and what is the end price of agave and is our thesis correct? And what we've tried to show here is that even if our thesis is not, if our thesis is off by 20%, it's still a 33% IRR to the investors. If our thesis is off 40%, it's still a 20-something percent IRR to investors. So, again, it's 5 years of negative cash flow, which is like the main, I think, gating factor to the opportunity. I wish we could grow agave in 3. And then I wouldn't be on this conversation because I would have gotten money from the first person that I spoke to. So that's kind of the rub of it. It's kind of like God's joke, right? We can go plant tomatoes and make money in 6 months, but 55-60% of the tomatoes that we grow will die. That's just what commercial farming is in tomatoes in Mexico. Or we grow agave, it takes 5 years to grow, but 4% of our crops die. I don't know. Which one do you want to do? Unfortunately, I don't know how to grow tomatoes either, but.
Jordan, I have a quick question. Clearly, we're all seeing Hollywood's tequila wars, so to speak. Has there been any outreach to those selected celebrities or their PR to see if they would want to invest in an operation such as this, especially them all being
They don't have
in
enough.
the tequila space?
They don't have enough money.
Ah,
They don't have enough money. Again, these are even Diageo. All of these companies are branding and marketing companies. I'm a picks and shovel company. Like the amount, I've done very well over the years consulting for some of these said companies, like in a branding and marketing way. And everyone just thinks like, oh, I'm going to start a tequila company. Oh, there's just tons of glass bottles out there. And there's tons of people who can make custom bottles. And there's tons of cork for the tops. And there's tons of like artists who can design the bottle. Well, the truth is there's not. And so, a lot of kind of Americans come to this and say, oh, I can just do it and it's quite easy. And then they consult with me to figure out, oh my God, I didn't realize how difficult this was.
sure.
They are in the same exact position as in a microcosm of Diageo, right? Like they're trying to show their investors how well that their brands are doing. They want to show what the bottom line looks like and to make investment a Constellation. There's one Constellation brand that is vertically integrated but they're smart because they're a Mexican family and they know that the most important thing to control costs in this entire business is controlling your agave costs, right? Like they know that, but the vast majority of people don't understand that. If you asked anyone at 818 Tequila, because I know people there, any of this, they have no idea that this is going to happen in 4 or 5 years from now. No idea. So the people I've been talking to, like I said, are like high net worth family offices that understand the data. Frankly, don't really understand the agave business, but understand the data and agree with me that how will supply meet them? That's nearly impossible for supply to meet demand. I don't know how supply, like I don't even know a theoretical situation where supply could meet demand in 2031 through 2033, other than people just completely stop drinking tequila like 100%, like 95% or something. That would be the only real way where supply doesn't meet demand.
So, Jordan, do you want to meet with any other tequila brand owners, or what is your ideal investor that you would be interested in?
Yeah, like I'm saying, just 5 year, people can handle 5 years of negative cash flow. Like there's really no smart money here whatsoever. There's a moat around the opportunity to the degree that, this is not, while this is very easy for us to do, it's taken us a long time, and we've had to hire all the industry best to get to this point. Like, it would be hard, Leah, for you to go down there, you or anyone, to go down there and do it. But the ideal investor is someone who can just handle 5 years of negative cash flow and can write a substantial check. Like I said, we have like 10.2, I think 10.1 or $10.2 million raised. I have a separate farm that I put $5 million into. That's just Miguel and mine. And then we're just trying to see how many times we can do these 450 hectares. Like, ideally, as you can see from the numbers, if I do 450 hectares, it's a big win for the investors. It's a good win for us. And if I can do 900 or 1,000 hectares, then it's much more exciting. So we're going to just keep rolling this for the next 3 years while there is this planting window. And we'll see how much it is.
Leah, to your point, if there was a tequila brand that you were aware of that was raising funds and they wanted to look a little bit more intelligent, they could potentially look to say, hey, we're vertically integrated by securing our plants as part of that investment. But
they're putting so much
never
money.
seen that.
But they're putting so much money into branding and marketing.
Exactly. That's what I was happening.
And that's already so expensive for them. And it's like their mindset, which I understand, especially startup brands, is like, just how many cases can we sell, right? That's all they're looking at, is how many cases they can sell. So they're not really looking like, my point is, if Diageo doesn't do this to the degree that they should, you're definitely not going to get a startup tequila brand to do it.
Chuck's hand has been up for a while. Chuck, you got a question for us?
Yeah, two, I think, real quick. First off, I think it's hard to see the little numbers on the chart with what I'm looking at here, but you have an exchange rate assumption in there. What's the
20
exchange rate?
20 pesos per kilo. It's in the top left.
Yeah, and how does that change over time, or what's the risk that goes in the wrong direction?
Well, if you look at, that's a good question too. If you look at currency, I mean, we can hedge against that, but if you look at it over the last 5 years, you'll give a better indication. You're right. If Mexico becomes Venezuela, then yes, that would be a problem, right? But we're presuming
it's on the list, right?
We're presuming
Greenland, Mexico,
yeah,
Cuba.
right, exactly. We're presuming that doesn't happen, but you can play with currency risk as well. I mean, what I would say is, again, the margins are so big here for the investors that if it gets devalued by a small degree, that will not take a big hit. Yes, if there is currency risk, if hyperinflation occurs and it becomes Venezuela. But again, historically, I mean.
Okay, great. Number two, just to clarify, you keep talking about the 5-year negative cash flow, get all that. But if an investor is going to make a decision to put money in today, is there a commitment to add more funds to cover the negative cash flow, or is that like already gathered up at the start?
Meaning, like, so for instance, Miguel, if you scroll down.
Yeah, I'm just
yeah, like,
wondering.
so we're not right. So it would be an annual capital call.
Okay, right.
Because we're never going to say, hey, investor, put in, as you see, first year 3.4 million. We don't have the rest of the funds yet, but we will. We're never going to obviously do that, right? So it's going to be, all of these funds will be committed, or let's just say, I don't think this will happen, but instead of 450 hectares, Miguel, bring it down to 200 hectares. Let's just say I'm only capable of raising the money for, I think I already have the money for 200. Let's just see how much that is. But let's just say theoretically, go ahead, Miguel.
Also to consider, Jordan, I don't know if you wanted to just explain that this is like a consistent 3-year for 450 hectares, right? Like,
so it's 450 hectares in year 1, 450 hectares in year 2, 450 hectares in year 3. 3 separate plots. That's what we could just do 1 year, but this is to take advantage of the opportunity. So I basically I'm $1 million away from having the funds committed for 200 hectares, right? And so the way this would work is, there's $11 million, the investors, whatever their percentage of that $11 million is, and then annually I make those capital calls on each of the 5 years, right? And then on the 6th year, they get their money back plus, and then 7 and 8 is pure profit.
So would there be capital calls for every year from year
Correct.
1 to 5?
Right. Just because,
Okay.
yeah, just because why would I take your funds if I can't utilize it, right? I mean, I would be
Right.
happy to do it, but I don't think that makes a lot of sense. So
Right.
that's why there would be capital calls.
And would the expectation be to invest the same amount every year on the capital calls, or is that very?
Yeah, that would be the
That would
expectation.
okay, good. Thanks.
So if you put in $1 million, I mean, again, I can't like really, I'm not trying to piecemeal this to get like what I did with 200 hectares is an investor came in and said, high net worth investor came in and said, I'm very interested. I want 65% of the business. I'll be responsible for raising the rest of the funds, and I'll be responsible for my own personal dilution of that 65% when I have my friends additionally invest. I said, great, that's perfect. So he's committed to the 10, I think it was a little less, 10 million. And then he brings on investors that are personal friends of his. And then I don't know what he's going to end up with, but his LLC will own 65% of the business roughly.
Okay, got it. Thanks.
Mm-hmm. So again, yeah, I mean, it is the 5 years of negative cash flow is an issue, but there's nothing I can do about that. And that's hopefully offset by oversized returns.
Your tequila production facility there, are you co-packing that with someone else, or do you have a facility set up?
We have our own facility that we co-own with another group.
Is there a lot of capacity available there, or?
We have as much, not at ours, but if you need capacity for tequila, people are hurting to produce tequila right now. Because there's I mean, we don't need to, if you need tequila, we don't need to produce tequila. We have, Miguel, how many liters of tequila do we own right now?
Probably close to 800,000 between like Blanco, Reposado, Añejo, like all ages.
I mean, we have like $5 million worth of tequila right now that we're holding on to. We're aging some of it, and we're holding on to some of it and waiting for prices to go back up. But like, this is an opportune time for tequila company. The least opportune time for a tequila company to buy tequila was during COVID. This is the most opportune time for people to buy tequila. So what's happening is like not a lot of tequila is being produced. Tequila volumes are lowering. Once tequila volumes get to a certain low point, they're going to have to start making more tequila again. And that's when the brokerage business starts back up again. And that's when they kind of refill stock again. So this is like, I mean, this is a slow time, a very slow time these last 14 months. Like, we've never made less money over 8 years than we have made in the last 14 months, but that's because of the slowdown, right? So now some people go run and hide during the slowdown, and we see it as a massive opportunity to go plant, and then a lot of our other kind of verticals will pick back up as volume comes down.
Well, for some reason, I just happen to have a lot of friends that have tequila companies. So I don't want to flood you with, smaller sales calls, but
yeah, it really just needs to be like, and I appreciate that, but it just really needs to be like, I believe that those people will not like. Often when I have calls, I just don't think they have the capital. And secondly, because I consult for a lot of these groups, I don't think they'll have all the capital that they're going to want to put into is branding and marketing of their product, right? Like, because they don't even know if their product is going to.
It's so competitive.
They don't even
It's
like
such a competitive space.
Like I charge $20,000 a month for consulting on tequila with startup brands. I used to charge 7,500, and I just keep bumping it up because I don't really even want to do it because I think it's almost a little bit disingenuous at this point. Because you get to a certain place and then you're like, so like literally, unless you have like $20 to $30 million to start your brand, I don't really even want to work with you because I just think I'm leading you down a path where in 6 to 8 months you're going to and spending 200 grand with me, you're going to realize like I need a lot more money than I thought I needed. Because frankly, you can't outmarket the Diageos, the Pernod Ricards, the Brown Formans of the world, and for every one 818 or Terramina tequila, there's probably 3,000 or 4,000 or 5,000 tequilas that you've never heard of that, so it's a very, very difficult. Now, if you have a brand and you want to go sell it in India or Asia, okay, that could work, or Europe, but to sell it in America right now, unless you have some like really nuanced and novel product, and even so, tequila is not that interesting. They all basically taste the same. It's just like what wrapper you have around them. So. I think this is actually like a this is the investor here is someone who actually just understands the model, understands the basic supply demand gap, or someone who's already in agriculture, perhaps. I think that's it. I mean, the people who've invested with us, it's Indian family office, who is one of the largest hotel management companies in the U.S., but they have experience in Africa and experience in Paraguay. They have a steel company in Paraguay. They have an oatmeal cereal company. So that's a recent one that just invested. We have a family office from Kentucky that invested, that's been in the bourbon business for a long time. So it's like that's been the profile of kind of some of the groups. But I think everyone's inclination is always to go to people like in agave, and I get that, but it's like I actually don't think that's the right kind of group, because either they could theoretically do it themselves, or they're just so focused on their brand and they don't really have the funds to be able to worry about that vertical integration anytime soon, if ever.
You guys we're 10 past the hour, so I just this was a great conversation. Jordan, thanks so much for taking.
Oh, thank you for setting it up.
To present, and everybody, thank you for taking time out of your Friday to join the call and listen and ask some thoughtful questions. It was recorded, so with Jordan's permission and everybody's permission, we want to share it with people. Try to get as much exposure for this opportunity as we can, and just kind of see where the money comes in from. Anybody that helps, will be compensated for their efforts, a finder's fee, whatever. Jordan's very generous. So if you know somebody and you want the recording of this and to share it with them, send it.
Perfect. Okay. Thanks, brother. I appreciate setting it up. We'll talk to all you guys soon.
Cool.
Bye.
Cheers.
Bye.